All right, well, looks like even with all the headwinds out there, uncertainty around the economy, what tariffs ultimately mean for businesses, there is a mood that is bullish. We've seen all-time highs for the TSX as of yesterday, and the mood in New York is positive this morning. Some of the power is coming from the AI boom. We just saw Shopify report better than expected results. That company has been leaning into the artificial intelligence advantage as well. Let's bring in Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners with Raymond James, to get her assessment of the markets. Brianne, great to have you with us. And I guess let's start with some of these big takeaways from earnings season so far. I mentioned Shopify surging in the pre-market. How does that impact, do you think, the mood of investors right now?
Yeah, thanks for having me as always, John. I think, earnings certainly remain a stabilizing force, and we have consecutively seen companies reporting. I think we've seen about 80% of the S&P 500 now reported, and the blended growth rate is tracking above 10%, which is positive, as you mentioned, and well ahead of expectations. I do agree with you, and the AI-linked names continue to lead the charge, but there is still a little bit of growing dispersion. So we are seeing, some costs rise, particularly in sectors that are tied to global supply chains. If we do look at Shopify, which is a stock that I have traded a few times in the portfolio, they have been a strong performer in the Canadian tech name. We saw after a 60% from their April bottom, the rally, the market is now really demanding proof and growth and that profitability can keep up. We saw sales growth, should continue to remain solid. As you mentioned, reported net income of 16% up year over year, and its revenue beat of 2.6 million. And the company is still providing, which a lot of companies and analysts are looking for, is their Q3 guidance that does include revenue growth mid to high 20% rate year over year, which is positive. So for us, Shopify has been telling the market it can grow efficiently, and investors want to see that translate into better margins, not just spending growth. So we are watching that company closely. I think right now, even with the pop we saw from earnings, valuations are a little bit stretched. We're seeing around 96 times next year's earnings. There's not much room for misstep right now with the company. So for us, if we were looking to add it back into the portfolio, we would wait for a little bit of a pullback for a favorable entry point. All
right. Now, I think without some of the biggest AI stories like NVIDIA leading the charge, maybe people would, not see these, sort of tech trends favoring the markets. It was interesting that recently NVIDIA, in part through some impressive negotiations by their CEO and founder and dealing with Donald Trump, found a way back into the Chinese market. Earlier uncertainty about that sort of was a bit of a stumble for that company. And that's why I wanted to talk about AMD, which is a rival to NVIDIA, has seen its stock gaining a lot of momentum recently. In the pre-market, it's been down in part because the company was unable to give a clear outlook for when it will resume sales in China. I wonder if it's that, if it's, whenever we have these factors to sort of take a pause on the huge high flyers in technology, maybe investors are sort of at that point in the cycle. What do you make of that?
Yeah. A great question, John. We do own NVIDIA in the portfolio and AMD as well. We have some clients that do own the stock there, some executives too. So we have been watching it extremely closely. I think that coming into the quarter, expecting some pressure, and that's exactly what we saw a little bit headed through April. I do think that, as you mentioned, the U.S. restrictions on AI chip exports to China hit margins a little bit hard. And even though revenue growth held up well, we saw AMD kind of took on 800 million inventory charge on those restricted chips, and that dragged the margins down a bit. Without that hit, profitability would have looked, I believe, much stronger. But we did see the damage kind of show in that numbers. I do think Q3 with China exports set to resume, that could unlock potentially 1.5 billion in delayed revenue for the company. Really a more constructive outlook headed into year end. Still, the stock traded a little bit lower in after hours. Investors weren't just looking for a recovery. They wanted a clear sign that AMD is gaining ground in the AI space. So that is something we will continue to watch closely and see. I think the data center business is growing, maybe not fast enough compared to NVIDIA, but AMD's growth in that segment was less than fifth of what NVIDIA delivered. So again, why we continue to favor NVIDIA over AMD, and that leadership gap is a big reason why we have that positioning.
And then finally, earnings season, it's just a snapshot in time. But on the one hand, you've got the AI boom. On the other, over the last week and change, we've started to see some cracks in the U.S. economy. So it's interesting to see how investors are reading through with companies like McDonald's, which is doing its best to offer value to customers. Disney, there's a few parts to obviously the Disney empire, but it looks like they're still very constructive on people going to their theme parks. How close are you monitoring the health of the consumer when it comes to the stocks that you pick right now?
Yeah, I think especially we expected to see, this quarter potentially have a little bit more sell-offs. And if companies weren't going to be beating expectations or had, a little bit less favorable outlooks due to tariffs, we expected to see some sell-offs. Great example was Amazon that did see an extreme sell-off there. Disney, has been gaining a little bit more momentum lately. I think they did report better than expected results and raise their annual forecast. Something great to see with the company is even in the last 24 hours, the media and entertainment business, they entered two major deals with the NFL and the WWE, which is good to see in exchange for 10% of equity stake in the ESPN there. So, yes, theme parks are holding up. Can we continue to see that if we are going to see weaker economic data? That will be something that we are watching closely, is how much the consumer is spending and where they are doing that spending, especially, as I mentioned, in the consumer discretionary space. That would be the sector that would likely get squeezed a little bit more if we are starting to see that economic data show additional pressure.